Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and in today's episode, we are going over some more earnings reports. It seems like every single company that we own out of the 22 on this list, it seems like nearly every single one of them is reporting within this week or two span. The news in the stock market has been crazy. Every public company, it's just so jam-packed this earnings season. Usually it's kind of spread out over a month or so, but lately it just seems like every single company on the stock market is reporting earnings. So I just wanted to go over all of them, and the three that we're going to be going over today is Visa. Visa just reported earnings, and we're going to look at how they're looking at going moving forward. They did just hit an all-time high after announcing these earnings, and I want to talk about what this will look like as an investor moving forward. Visa is one of my favorite companies in my portfolio and one of my largest positions. It is currently sitting at my fourth largest position out of 22, and so I am pretty bullish on this company. I put it over all of the companies that I own except for three. So I really love Visa. I love the business model, and this just gives me one more reason to own it. So Visa, we're going to go over in this video with that, what's going on with Visa. And then we're also going to go over another one of my largest holdings. Currently makes up 5% of my portfolio, tied for fifth place. 3M is a company that I absolutely love. It's a very defensive stock that has over 60 years worth of dividend raises and produces over 60,000 products. They just reported earnings here, and I want to talk about how this diversified, incredible cash flowing business can evolve past its old boring legacy business and transition into creating new products, and will have a bright future looking forward. So we have a third company reporting earnings as well, and that's Waste Management. Waste Management is one of the smaller positions in my portfolio, and speaking of defensive, when I was mentioning with 3M, of the companies that I own in their defensiveness, I think Waste Management is one of them. Probably the most offensive in this portfolio, if not one of the most offensive. People are always going to need trash. And so we're going to go over in this video what this company looked like reporting its first quarter earnings and what will it look like going into the year of 2021 and what my plans are to do with this company as far as owning it, increasing it, decreasing it, what my plan is to do with this stock. But I did want to mention really quickly, we are at another all-time high in the portfolio. It seems like every single day, whether it's referral bonuses from you guys, deposits from my own income that I deposit every single Monday, I put in $100, or it's dividends that I receive, or just in general, the stock price is going up. It seems like every single day we're hitting a new all-time high. And today is no different. Today we're at $12,861.23 from the time that I'm filming this. And you can see this number move around as I update it. You can see the little dollar amount moving there. But today is another big green day in the market, up 0.8%, which for a conservative defensive dividend portfolio like this, a 0.8% green day is a pretty big move up. And that puts us to where we're at another $101 worth of capital gains. But not only does this portfolio have capital gains, if we look at the long term, since starting the portfolio, the earned dividends and capital appreciation is really starting to take off. I remember how long it took me to get this portfolio to where I earned $100 in dividends since starting it, and it took months and months and months. And the first 100 took a really long time. The second 100 didn't take quite as long, but it still took quite a while. And now we're already at 229, and we should be hitting 300 very, very soon. So I think that's one of my main goals with my portfolio is to get a certain dividend threshold by the end of the year, and I think we're on track to beat it, which brings me up to my next point. Before I jump into all this, before I give out all this information, my name is Jordan. I'm a millennial investor. If you're not familiar with me, these are the 22 companies that I currently own on this list right here. And if you look over to the right, we will see my annual and monthly dividend income tracked on these charts, and they are updated every single month. Next week, we'll be giving an update with the end of April coming about, and we'll be giving the update for the month of May, as well as my portfolio value and my monthly YouTube income. My 2021 investing goals are the top 5 listed right here, and my 2021 stock market prediction is listed right there. Of the dividend portfolio, we've had 107 people referred. Of these 107, every single one of them love it, and one of the main reasons that they do that is for 2 reasons. One, because this company is absolutely free, it has incredible features, and 2, this gives you an opportunity to earn a free $30. Just sign up with that link, deposit $100 to the platform, and you get a free $30 just for getting signed up. And so all you got to do is use that. It is down below in the description, as well as lots of other things down below in the description as well, including my pie. And there's also mentoring calls. So if you want to get help getting started in the stock market, there are mentoring calls available for you guys down below. And there's also other things like auto savings accounts, credit card referrals, lots of other things like that. But I hope you guys enjoyed this video, and let's go ahead and get started. Visa is the first one that we're going to look at. We're going to take a look at this company's earnings, but also what it's looking like going forward. forward. Like I said, it's 6% of my portfolio. We're up 43% on a money weighted return. I don't really like money weighted because these numbers are a little bit volatile, but that's when I'm up on it. And that's the long-term dividends and capital appreciation since owning it. And I currently own about 3 1/3 shares at an average price of 193. And ever since announcing these earnings, this stock is really starting to take off. Oh, and like I said, by the way, Visa's green today. If we sort on the day chart just for today, and we sort by best performers to worst performers, every single stock that I own in my portfolio today, except for two, except for Caterpillar and Altria, are in the green today. So like I said, today is a really, really good day in the markets. I show red days and green days as well. I show both sides of it, but it's kind of crazy to see. Anyways, Visa is a company that I love. And one of the main reasons why I love Visa is for the profitability. Now, this company is so profitable that it does share buybacks and dividend raises at a company that is almost uncomparable to any other company on planet Earth. There are some other companies that raise their dividend 10+% consistently, and if they do it, they usually can't keep up with the amount of buybacks that Visa does. It buys back so many shares that the EPS numbers are probably going to go up year over year, even if this company does not grow profitability at all. That's how aggressive they are with their share buybacks. And I want to show real quickly that not only does this company go up from its share buybacks and its dividend raises and people getting more excited about the stock, but this is a growing company on both the top line and bottom line. Okay, so let's go ahead and look at quarter over quarter. It was 5.6 billion and went up to 5.7 billion and some change. And the operating income did go down a little bit, but the net income also trickled down as well. But the growing revenue does show signs of a strengthening economy because obviously Visa is very sensitive to the economy as people use their debit and credit cards for purchasing, well, literally anything. So let's go ahead and look at these first quarter results. The GAAP and non-GAAP net income of 3.1 billion or $1.42 in earnings per share. Net revenues of 5.7 billion, a decrease of 6%. So a decrease year over year. Once again, this is factoring in the first quarter of 2020 and it's going into 2021. First quarter did factor in the pandemic and shutting down the back half of it. So a 6% decrease is understandable, totally understandable. Net revenues of 5.7 billion, a decrease of 6%. That is a little bit of a bigger decrease than I expected, but that's totally okay. Payments volume and all types of other cross-border volume and process transactions versus the prior quarter increased, and it did improve long term. The return $2.5 billion worth of capital was returned to shareholders in the form of share repurchases and dividends. And this last point right here, like I said, with buybacks, this company does an insane amount of share buybacks. The board of directors approved a new $8 billion share repurchase program, bringing the total funds available for the share repurchase to over 11 billion. And what I want to go ahead and show here, let's go ahead and take my calculator. I'm curious. Let's take $11 billion, if I can get my calculator pulled up here. Okay, and let's take $11 billion right here, putting it in my calculator, and divide that by today's share price of 234. This company is looking at buying back 47 million shares based off of today's prices, which it could be even more if the stock were to trickle down. This company is wanting to buy back 47 million of its own shares. So obviously as an investor, if you're an investor in Visa like me, your shares will become more valuable as there's less stocks available, and that will also raise the earnings per share because there's less earnings per share to go about. There's less shares available on the float and available outstanding, so that way your investment becomes more valuable. And also as they buy back those shares, as they buy back 47 million shares, those shares no longer have to pay dividends because they're retained by the company. So a company like this that is so profitable really starts to turn out into some beautiful results, and that's why the share price has done this over the last 5 years. Another thing that I want to mention as well is that this company has one of the highest margin businesses of any company on planet Earth. It is absolutely insane how profitable this is. On average, the profit margins, not their operating margins, but the profit margins of this company are about 48%. And basically what that means, for every $100 in revenue that Visa produces, $48 of that 100 is purely on the bottom line net income. So almost half of the revenue that they get turns into straight bottom line net income. So that is insane for a company like Visa. That's why I love it. Their company is heavily integrated into our economy and, more importantly, into our financial wallets. And this company has some incredible operational highlights, and I just want to highlight those real quick. In 2018, their total volume, including payments and cash volume, was 11.3 trillion. Well, that's T, by the way, not B. That's T with a trillion. In 2019, it went up to 11.6 trillion. It went flat in 2020, obviously because of the pandemic, back to 11.3, but not a decrease there, just staying flat over the last 3 years. Payments volume still increased from 8.3 trillion up to 8.8 in 2019 and 2020. Transactions processed is still increasing. So this is what I like to see. The transaction process and the cards issued. This is what's most important to me because Visa, they can't control the economy. They can't help that a pandemic happened. They can't help that the coronavirus took over our economy. But what they can help is how they operate their business. Can they get as many people carrying Visa in their pocket as possible? Can they get as many people using their Visa card more and more and more than ever? If they only used it once a week, can we get them to where they're using it 3 times a week, 5 times a week, 10 times a week? And so this is what's important here. Transaction processed on Visa's network, 124 billion in 2018, 138 billion in 2019, and even in 2020, when the pandemic is happening, 140 billion. And the same thing for cards issued, 3.3 billion in 2018, 3.4 2019, and they're still upticking here to 3.5 billion. That's 100 million cards extra every single year, year over year, and that's why the net revenues, while it is a little bit of a downtick here in 2020, you can see that the trend for most of these numbers with operating expenses, operating income, net income, all these things are typically going up as the business gets bigger and bigger and the company gets more valuable over time. And even the earnings per share number, even going down in 2020, 4.89 for a company of this size is not bad whatsoever. But Visa is one that I think they're looking at getting a rebound in 2021, and I think that their guidance is very healthy going into 2021, and especially with this company already raising that dividend almost 10% in 2021 and having more share buybacks than ever before, totaling $11 billion. I think that this company is set for a run. I know it's expensive now. I know it's went to 234 a share and it's higher than it's ever been. But I would be really amazed that if in 2021, if this stock didn't start to get over 250, if later in the back half of 2021, I wouldn't even be surprised if it starts to break above 300. I love this company, and there's almost no price I would sell it at because it's one of my most bullish companies that I own. And this company pays me almost nothing in dividends. It's so insignificant, but that doesn't matter because I'm so bullish on the company that I don't care what it sells at. In the course of owning this stock of over a year, I've only earned $2 in dividends, but I mostly focus on the market gains because I want to get on this company at the best price possible. But Visa, I'm excited for there, and we'll go ahead and move on to the next stock. Let's move into 3M. 3M is one that has performed very nice over the last couple of months. We're up $124 on it in total, and the money weighted return for this stock. And there we go. I finally got to pull up. The money weighted return on the stock is 49.6%, market gain of 114, earned dividends of almost $10, and I own about 3.1 shares of this company at an average price of 162. And I bought this stock heavily back in 2020 during this downturn around these prices of 150, 160, and even in the 170s. And now we're looking at breaking $200. And just earlier, yesterday, I believe, or no, 2 days ago, this company finally did break back above that $200 mark. And now the dividend yield is not quite as attractive as before. And while the dividend growth has been slow, this company is looking for a rebound because this company is very sensitive to the economy. Because if people lose jobs, if an unemployment rises and people are not spending it much on goods and services, unfortunately 3M gets hit very hard. But if we look at these numbers, there are obviously some upticks here and there's some positive news going forward. Sales of 8.9 billion, up 9.6% year over year. Organic local sale currency increased 8% year over year. Both GAAP and adjusted earnings per share of $2.77, which is very high for a company of this stock price. Operating cash flow of 1.7 billion, adjusted free cash flow of 1.4 billion, up 49% year over year. Return 1.1 billion to cash to shareholders via dividends and gross share repurchases. So just like Visa doing buybacks and dividends, but more importantly, this little part that I'm highlighting right here, the cash flow. Up 49% year over year, this company is having its profitability coming back in a massive way. When a company has that much free cash flow relative to its size, a $100 billion market cap doing 1.4 billion in free cash flow a quarter, this company has so much money to do whatever it wants. It can do dividends, it can buy back its own shares, and more importantly, it can reinvest back into that business. This company has an all-time high of about $200 260, this company will absolutely break above that. It might take 1, 2, 3 years, but this company will absolutely get to a point where it's back over that all-time high number. Honestly, I don't even think it'll take that long. I think it'll probably be maybe say 1 to 2 years before it gets to that point. Probably not 3 or 4, but 3M is one that I really like, and this company is so diversified. I always talk about the defensiveness of companies and why I look for companies that are very defensive and have compelling valuations, and 3M is one of them. 3M is a company that has a valuation that trades pretty low relative to its peers. And you can see, instead of going over number by number, you can just pause the video and look at it. It's diversified by segments because this company has so many products, you can't really put it in one category. Okay? So this company has a safety and industrial segment, a transportation and electronics segment, a healthcare segment, a consumer segment, and in those segments, there's also sub-segments. Like, for example, safety industrial has roofing granules, closure and masking system, electrical markets, automotive aftermarket, abrasives, industrial adhesives and tapes, personal safety. In transportation electronics, they have transportation safety, advanced materials, commercial solutions, automotive and aerospace, and electronics. Healthcare, they also have things like food safety, drug delivery, separation and purification, healthcare information systems, oral care, and then medical solutions. In consumer, they also have another category of 3%. Then they have consumer healthcare, they have home care, stationery and office and home improvement. And that is not to mention, in those subcategories, there's those subset categories like we just named off. And in those categories, there's many, many products. There might be 10, 20, 100 different products, sometimes even more than that, in just these little subcategories. So this company is very diversified, very profitable, did report its first quarter earnings. And like I said, if you want to go over all that without going into the deep dive, but just giving you some bullet points, you can see why this company, in my opinion, is a great buy moving forward. And then we have, last but not least, we have one more company to go over. Waste Management is a small 2% of my net worth. It's 2% of my portfolio. And of the companies that I invest in, I think this one is arguably the most offensive. It has a target weighting of 2% of my portfolio. It has a money weighted return of 53.85%, total returns of about $65, 62 of that coming from market gain, $2.71 coming from earned dividends. It's one of my smaller dividend payers, and I own just under 2 shares of this company at an average price of $105. And this company has really started to take off and recover in a big way, as you can see from this big roar here. Ever since about late February, early March, this company has just went up in a big way. Now, this company did just raise its dividend right here. They did just pay that new dividend payment of 57.5 cents in March, about what, a month ago from now. And this company has had an awesome track record of raising that dividend every single year, while also doing a pretty good amount of share buybacks and acquiring other companies and growing that revenue in a massive way. Now, this company did just report, like I said, the first quarter earnings, like all these companies, and it is looking really nice, because if you look at the trend, once again, of 3.7 billion, 4.1 billion, while also the earnings per share is upticking as well from 93 cents, 85 cents, $1.01. This company is steadily increasing year over year. And the EBITDA margins are increasing as well, 27%, 26%, and now they're up to 28 and 27%, a general uptrend there, as well as the net income from not even reaching 400, now it's well into the 400s. This is once again another good sign from this company. And while there might be a little bit of a downturn during the 2020 from the pandemic, people not creating as much trash, I really think that it honestly doesn't matter a whole lot what happens with the coronavirus and the shutdowns, because this company is once again diversified in the trash sector. If you look at the revenue mix and the collection revenue mix, there is 2 different categories that is making this company diversified, and once again, in those categories, there's subcategories. So in the revenue mix, you have a 9% being other miscellaneous categories, you have 5% recycle, 10% transfer, 21% landfill, and 55% collection. In the collection, you have 5% mixed up with other, 29% being residential, 25% being industrial, 41% being commercial. So you see how it's not just people's homes that they're cleaning up, okay? They're not just cleaning up industries, they're also doing commercial buildings as well. But in those types, they're also getting their revenue in different forms through recycling, collection, landfill, transfer. There's multiple ways that this company gets money. And I think that as this company gets more profitable, the monopoly that they have over their sections that they clean up trash for, and just in general, the way that this company runs its business is very, very good. If you ever see those green, ugly trash trucks, well, actually not too ugly. They're kind of cool looking for a trash truck, right? If you ever see those green, ugly trash trucks and trash bins, just know that every time they come by and empty that thing out, I just got paid for it because I'm an owner of the company, I'm a shareholder, and I'm very happy with my investment. And I don't plan on selling Waste Management anytime soon. Now, unfortunately, that dividend yield is not nearly as good as it used to be. That's partially due to the share buybacks from this company buying back its own shares, but it's also from investors just getting excited from the revenue and profitability growth of this company. And instead of buying it now in the 110s, I unfortunately have to buy it in the 130s, but that's okay because I love Waste Management and I'll buy it at realistically any price. But those are the three earnings that we went over in this video. I hope you enjoyed this video. Where once again, like I said, we're having a big green day and we'll be going over more earnings in the next video. Like I said, 107 people have signed up. So if you want to sign up down below, you'll get $30 just for getting signed up. But I really appreciate you guys watching all the way to the end, but I'll catch you guys next time.